Morning, Forex traders. Good morning, Moga. Thank you for your good wishes. We're going to take a look at the Forex market today on Wednesday in a live trading room here, webinar with Admiral Markets, of course, in just a second. But as always, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So thanks for your attention on that. Once again, welcome to the live trading room hosted by Admiral Markets. My name is Chris. We're going to take a look at all types of trading today, and we're going to take a look at the euro, the dollar, and see if there's any decision that we can expect sometime soon after FOMC. Tomorrow we have an educational webinar, by the way, on fibs, so we definitely recommend that. For those of you who are here, by the way, I'm giving away a free indicator for those of you who are attending on any Wednesdays or Thursdays, and the only thing you need to do is write an email, by the way, to me, and I'll post the email in the chat. So you can write me and I'll send it to you. All right? Cool. So today we're going to take a look at defining the trend, if there's any divergence, Fibonacci levels, support and resistance. We're going to be using our technical analysis to establish if there is a trend or not, and then trade it accordingly by trading, for example, a pullback, checking for filters, and seeing if there's an opportunity to trade, like a breakout, for example. All right. As always, we're going to take a look at the Forex calendar before we look at trading, but Michal has a word or two for you first. Welcome, Michal.
Good afternoon or good morning, everybody. Thank you very much for such a lovely introduction. Chris, in just 1 second, I will change everything to my screen. I hope everything is going to be working just fine today. There we are. For those of you who don't know me and see me for the first time, my name is Michael Olechov, and I'm a client relationship manager for Admiral Markets. In essence, my job is to create the best trading environment for you. If you guys have any questions you want to ask me, you can always email me. Find me on Skype. I have all the contact information right here at the bottom of the slide. And you can always run my name in the search in Google. You'll always find my LinkedIn page, and I encourage you to add the connection. I'll be very pleased when you do so. I'm sure you're going to all enjoy the webinar today. You will learn new skills and will be able to successfully implement them in your day trading. By the way, make sure you take advantage of the new indicator Chris offered all of you today. I'm pretty sure it's going to be do wonders for your day trading, and I'm very sure the presentation today is going to be excellent. I see that the amount of participants is growing, and we do have people who attend the webinars on a constant basis. It is very pleasant to see that. It is great to see that a lot of our traders do not stop and carry on with their education, trying to make tomorrow more profitable than today. When you work for a financial company like I do, you get to meet a lot of different people who are interested in finance. You meet traders who have been trading for years. You meet people who are just making their first steps in market. You get acquainted with successful traders and the ones whose profits are not as high as they could be. I have always wondered what separates a successful trader from the rest. If you analyze the field, you reach a conclusion that great stable results are not just down to the strategy implemented, or not even down to your intellectual capabilities. Both of those factors are important, but there is something else that should be also considered. After all, the things you should know to be able to make good decisions in Forex are difficult, but the concepts are not impossible, and I'm sure that every single one of our traders could have seriously improved their overall trading results if they tried hard enough. And I'm convinced that a lot of traders must go beyond learning about the variety of trading techniques and should also approach their trading from the motivational and psychological side. So it is fairly simple to measure your success in trading. If you are profitable on a constant basis, you are a success. If you make losses, well, you're not that successful. So Angela Lee Duckworth, she has conducted an interesting research in the US. She studied people in challenging environments, and the aim of the study was to determine who was successful and why. She studied teachers, army personnel, and salespeople at multinational corporations. And at the end, one key characteristic emerged. It wasn't health, good looks, or IQ. The reason why people were more successful than others was grit. And grit is passion and it's stamina towards your long-term goals. Grit is sticking with the future day in and day out. Not for a day, not for a year, but for a long, long time. It's like living a life like it's a marathon, not a sprint. To me, the most interesting thing about grit is how little we know about it and how little we try to learn it. How do we get ourselves motivated and have the strength to follow through with our commitments? The answer to this question is, well, no one really knows. So far, the best idea is being developed in Stanford University. It shows you the ability to learn and analyze, and that is pretty much what Forex is all about. It's learning and analyzation. It is not constant. It changes with your efforts. And more you try, more things you do to get better. For example, trading, getting greedier you become. You become a person who's a lot more likely to persevere, even if he fails. I wanted to let you know that a failure in something, it can be anything, it can be Forex trading or it can be life. But your failure is not attributed to your talents or your intellectual capacities. It is your lack of grit that makes you fail sometimes. So when you choose something as your goal, as your aim, you have to put continuous efforts into achieving it. For all of us here, we use Forex as a tool. We want to use Forex first to have a source of extra income and then possibly as a path to total financial independence. And that is a great future we have imagined for ourselves. Many of us will fail, but we fail not because of the economy, not because of the broker, even not because we were not smart enough. We fail because we don't have the grit to follow through on the dream every day, every month, day, year in and year out. Now, this is why I spoke about people who attend the webinar on a constant basis at the start of the presentation. You are most certainly getting there. Keep learning. Keep doing things better than you would have done them yesterday. Success and everything that comes along with it is reachable. All you have to do is work towards it every day for years and years. Do not give up. This is something I wanted all of you to take away from this presentation today. If you don't give up, good things will eventually happen to you, and you will see how your progress in Forex will change into a more positive thing with months to come. Thank you very much for listening. It's been Mikhail Olakov once again. Here is my email at the bottom with my Skype. And it's very important for you to put it down because we still have some days left in September, and we're still running the webinar special for September. So remember, you can always receive a bonus on a deposit over $1,000. For details, reach me either via Skype or via email. Everybody is eligible, and I'm very hopeful some of you will take advantage of this promotion. Thank you very much for listening. I will now pass the microphone back to Chris, who will continue with his presentation. Thank you very much, and good luck with your day trading.
Thank you so much, Michal. Great stuff always from Michal, very interesting and inspirational. And that will give us a lot of confidence today. Everyone looking forward to Forex trading, I hope. Please let me know what you are going to look at today. We are going to, of course, start with the majors, but I also want to take a look at a bit of a correlation cross analysis here to see maybe which of the potential breakout trades could be the most interesting. So we're going to do that in just a minute. Let's take a look. We got nothing really major going on this morning within our London Open session. The New York Open has some USD news, by the way. Alrighty, September is getting closer to an end. We have about a few days left. Today I do expect some interesting movements. We had a pretty slow Monday and Tuesday so far this week. So Let's see how that goes. All right, let's see if we get the breakout finally today. Now the breakout, I'm specifically, of course, talking about the dollar. We had, of course, as I already told you many times, we had dollar strength during FOMC, dollar weakness, excuse me, and we're seeing a bit of dollar strength depending on which currency you look at. Against the euro, not so much, but if we're, for example, against the Kiwi, quite a lot. The Kiwi has been relatively weak. So that's why I want to do that currency correlation and see if we have an interesting break or bounce trade heading our way today. All right. Now, once again, if you want that indicator, just to emphasize, I'm going to quickly show you which one I'm talking about. And that's just a bonus besides Michael's offer there. This is a free indicator, and it looks like this. And I think it's really handy with defining the trend. All right, so it's not something to directly trade, but take a look, see if you like it. It's for free anyhow, no risk there, so you can just send me an email. You can do both. You can either write your email there or just send me an email. I posted the email there above. I think everyone should be able to see it. All right. Maybe, in fact, it's better if you send me an email. Maybe that's better because I can't copy the message somehow. And we would maybe, losing time for the audience to tell to everyone. That's probably the best, in fact. And if you look at this euro-dollar, the oscillator is back at the zero line. All right. Yes, that's exactly what I indeed said, Darshan. If you want that indicator, absolutely. If you want this one we're looking at, just to emphasize to everyone, just send me an email above to Chris/Svorcik. So once again, one more time, anyone who wants to just send me an email there above, and you'll get that. Okay. Goody good. So let's take a look at that indicator, in fact, and you can see that the oscillator is back to the zero line. Back to the zero line there, all right? Right in the bottom. And not only that, the 4-hour has lost its green color and has become gray. Now, I'm not saying that the breakout wouldn't be good on the euro, but you can obviously see that the pullback is quite relatively has taken long and deep. Deep on the Kiwi, New Zealand dollar, quite long in time on the euro. Now, it doesn't mean that that couldn't be a pullback, because if you look, of course, at other areas, like here on the left, those could definitely be pullback moments, right? So as long as we stay above the band on the 4-hour chart, we're still in a bouncing spot for the euro. That's basically pure and simple what it boils down to. And if you then, maybe let's take a look at the day chart first. You see it's light green, which means it's kind of retracing at the moment. And what else? Let's take a look at maybe, well, the targets we know, 136.40, 136, 137. Those are the areas we can think of when we do continue to the upside, okay? And otherwise, let's zoom now back to the 1-hour chart. We could add a trend line like that, for example, as well, by the way. Let's go to the 1-hour chart. And you can see that if we put a trend line on the tops, that's the breakout we're waiting for. But if we zoom in further, so you can see it a bit closer, you can also see that the band at the beginning, at the top right here, price was moving towards the band. But the band didn't give, it acted as support, but we didn't get a bounce off the band. It just made a sideways move. and then broke below our pink band, and then started to use the pink band as resistance. And we're now caught between the gray and the pink band. So we are at a decision moment on the euro dollar. I mean, the gray band is the long-term support on the 1 hour chart. So the gray band should give the bouncing spot here. If it doesn't, and it pushes through, then maybe we're going to make a bigger reversal. So I do think it's an interesting spot. That's why I started off with saying, well, maybe we'll get those breakouts today. Primarily, I like the breakout the most, obviously, because then price would be above the moving averages and everything is lined up to the upside. Price is above moving average is above moving average. So definitely important. And not only the trend line, in fact, would be breaking, but we also, of course, would be breaking above the pink band and then continuing to the upside. Now, the continuation to the upside I still think is likely, especially if you look at the oscillator. We don't have any divergence on the 1 hour chart. Usually speaking, we would first get some divergence before making a bigger retracement or bigger reversal to the downside. But it's not, it's not a 100% rule, of course. It is a higher probability, though. So that's what we can really interpret from the 1 hour, 4 hour day chart with our moving averages. All right? Alrighty. Let's take a look at the day candle because Kalen has a great observation there regarding the day chart. And that is the length of the retracement. And Adrian is also talking about it, that the risks of a continuation are getting higher because of the length of the entire move. And he's certainly right. I would consider today still okay. And that's just because of this setup on the 1 hour chart. Preferably, I would like to have seen the break somewhere in here or here. Those would have been better breaks because then we would be breaking the band off when bouncing off the band, or the second attempt, which is still okay. This would be the third attempt. So the statistical odds are decreasing a bit, but we're still kind of caught in a wedge here. So if we break that wedge, I'd still be okay with that, personally. But let's take a look at that day chart. Let's see, we're going to take a look at how many candles we have to the side here. 1, 2, 3, 4. Now, personally, I wouldn't be inclined to count Sunday as one of those days. Let me see if that's true. After FOMC, basically, we had Thursday was an up day, Friday, Monday, Tuesday. It's basically the third day. Today's the fourth. I wouldn't count Sunday as a separate day, personally. So I would say it's the fourth day currently. But Kalen, you have somehow sixth. Not sure why you think it's a sixth day. Even if you count Sunday, it would be 1, 2, 3, 4, fifth, I think. Does that match up with you? Anyhow, it is so. You're all right, though, Kalen, that, of course, if we don't break today, if we don't break tomorrow, we obviously have 1, 2, 3, 4, 5, 6 days then, in that case, and the break probably then not happening, and we could expect a reversal. So by Friday, if we don't break today or tomorrow, then I would say reversal is possible, and higher. Just the odds of that happening are just increasing. Okay, Kayla, no problem, no problem. Well, I would say either it's the fifth or the fourth. I'm not too fond of counting Sundays as a day. That's why. let's see. So that's the trade we can look for today in our session. The entire movement really on the euro dollar has of course been hardly nothing. And in fact, if you look at the 1 hour chart, the last 2 weeks, euro dollar has done almost nothing. This was 2 weeks ago, this was a week ago, and this was this week so far. Right, so except a small spike here and of course FMOC, no real movement. So let's see. Oh. Sorry, I deleted my own chart. Okay, let's take a look at the Camarilla pivot point indicator, see what it says to us. An H4 at 135. Which makes sense because that would be basically breaking out of that trend line, right? That makes a lot of sense. So that's something we can look for. 135, the break of 135 level. We're now at 134.72. L4 at 134.42. Yeah. Well, you know, that makes sense. We of course are in an uptrend and we have an impulse to the upside. But if we break that low and below 134.42, then maybe that bigger reversal is going to happen. So it's of course counter trend, obviously, and would be definitely more riskier than the upside. There's also L3 long at 134.60. Let's take a look at that more closely on maybe this chart. 134.60 could be maybe a fib level. Let's put a fib on this up move. We stopped at the 236. We stopped at the 382 fib. So maybe if we do move to the 50, it could be a bouncing spot. And that is at 134.50. So those are two things we can look for. 134.50, a bounce off 134.50, 50 fib, the 50 fib at 134.50, or a break above 135. Price is right in between now at 134.75. Let's keep an eye on it. So 134.50 is the 50 fib, and the L3 is 134.57. Pretty close by. The L4 is below the 50 fib at 134.42. Good. So let's keep an eye on this. Looks like an interesting setup today on the euro. Let's take a look at quickly at the pound. $30-minute chart. L4 above 160.50. Here too, of course, we have a pretty good trend line that we have to break above. And I think, let's take a look and put a fib on this up move. You see, the pound is one of those examples where we really corrected very deeply. I think a lot deeper than what seemed likely with this up move. That, of course, has also been because of the euro pound that has been correcting. So let's take a look at some of those correlations. First of all, let's start quickly with the dollar index. Get a feel for the dollar, and then we'll work our way through the correlations and see which one would be the best today? The dollar index, basically we did break the first support line here with that FOMC announcement. Let me make it orange. But we still have a monthly trend line, but also, in fact, a monthly support. So we still have space down to that monthly support, but then we could maybe expect support on the dollar index. And then do we break or bounce? That's the question, of course. But there's still space to that monthly support. So some dollar weakness there still remaining, that there could be some dollar weakness still remaining, let me say it this way. Okay, so that's the dollar index basically. Some downside still to the monthly support, and then do we get the bounce or break, right? By the way, regarding the dollar index, if you look at the weekly chart, you can see how much this is in a range, by the way, since 2009, creating a bottom here and a top here, and we've been basically bouncing between that, and we're about halfway. And especially recently, we've really been quite choppy. If you look at the ADX, it's drastically decreasing, right? So in the long-term things, if we get a bounce here, we could move back to the top of that range, or if we break, we can move back to the bottom of the range. That's kind of what the bigger trades, besides our smaller trade here, our smaller 1 hour breakout, what we could expect on the long term from the dollar. A bounce would, bring us back to that. A bounce or break would bring us basically back to one of the extreme sides of that range. Alrighty, that's the dollar. Now let's take a look at some of the crosses. Let's take a look at euro pound. Euro pound. Alrighty, went right to the minus 618 after the 50 fib. So we could be at a bouncing spot on the euro pound. And if you look at our indicator here, you can see price is above the pink band, but couldn't break the gray band. So it's actually caught in between those bands. There was some divergence here, and if you have divergence, the gray band, in fact, is the target for that divergence, and we've hit that. That's pretty useful, by the way, that rule. So once again, I'll repeat that just in case. If you have divergence, the gray band is the target of that divergence. Very useful rule, by the way. Just an educational topic there in between, okay? If you're using this indicator or these tools. So what can we expect? Well, let's zoom in quickly to a 50-minute chart. And if you look at the 50-minute chart, to me, it seems like a pretty good chance of 5 waves up here. All right. So basically, we could expect maybe an ABC. Let's take a look at the 1 hour chart. And if we put a fib on this first up move, we stopped at the 50 fib. So we can put a trend line easily on the top here, and maybe even on the bottoms like this. And a breakout to either side could be interesting, because if we break to the upside, we would probably continue with that motion like this up to the 50 and 272 confluence at 85. Or if we do break lower, we could at least move down maybe to the 786 fib or the 618 fib, where we could see support again. And then maybe still bounce to the upside. So if we bring now that back to the 4 hour chart, you can see that either this or maybe that could be likely. That seems to be the path of least resistance, either one of these three. So we'll keep an eye on those orange lines. But at the moment, I would say the balance between euro and pound, well, obviously we were in a downtrend, but you can see we're getting some potential resistance. So not a clear winner, I think, in this case. Let's take a look at the euro odd to see if which one is stronger, the euro or the odd. Looks like the euro, in fact, broke out last hour. Broke out 45 minutes ago out of this triangle that we have on the chart. And yeah, we can still wait for the pullback maybe. That was the break. As Tarantula says, how does he say it? The happy trigger happy traders are doing pretty good here if they take the immediate break because it already moved some 30 pips. So let's see if we can get the pullback. We can put it on the watch list as well, euro odd, because it's breaking out of that triangle. I'll put it on the watch list, euro odd. Maybe we get a hook back there. So if you look at the 1 hour chart, either this is the potential to maybe go to, for example, the minus 272 target at 145. Let's put it on the 4 hour chart and you'll see maybe more what I mean. Is we've made, of course, a big downside. We're bottoming out here and got a good impulse. So the likelihood now that we are going to continue with a further correction is high. All right, we broke out of this downtrend here, hooked back and bouncing off the band. Look at this band here on the 4 hour chart. Very useful. Band like this, containing the downtrend, using it as a resistance, right? We broke out of that, went to the long-term moving average after we've had divergence. Do you see that? Divergence between these bottoms. Where did price go to? Right to the long-term moving average. That was its target, or is, right? Then we got a retracement from there, and we bounced off the band now to the upside, and we're breaking this triangle to the upside. That's why I'm interested in that trade to the upside, because we could be breaking here, bouncing, and continuing. Alrighty, let's keep an eye on this. What else? The odd New Zealand, I want to quickly take a look at, and it seems like we got double bottom here. But we're still underneath the daily band. And you can see that that has worked pretty well as a resistance throughout the downtrend since summer 2012. So I don't want to get too excited about maybe this pattern while we're still under the band. So we could see some resistance here and it move down still because we also hit the long-term moving average 4 hour chart. And in fact, it could be maybe an interesting setup to look at something like a break of this trend line, for example. So maybe some odd New Zealand downside is possible as well. We'll take a look at the 1 hour chart. Now obviously the downside will probably be limited in its scope. It wouldn't be a swing trade because we do have a potential double bottom, and in fact we could maybe even expect support somewhere here for that upside, one more upside at least, maybe. So any downside would be targeting probably, let me take a look at the 4 hour chart, would be probably targeting the band of the 4 hour if you want a conservative target. That would be the target. So you can see how that all pieces together. Had a pretty good 1 hour bearish candle, as you can see here, pretty impulsive. So let's see if we get the hook back to the 5 minute band, which could act as resistance here. That could be a good spot for a short to the downside. Down to the 4-hour band down below here. Let me take a look where the 4-hour band is. I'll put a green line in the middle line there. That's the 4-hour band. So let's move back to the 5-minute chart. That would be the trade idea, maybe. A bounce off the 5-minute band down to the 4-hour band. All right. So let's keep an eye on that. It is moving up a bit. So those are some of the crosses. I wanted to see where we could expect more strength. Looks like the euro dollar is probably going to break earlier than the odd dollar. So let's move back to the majors now and go quickly scan all of the currencies. Okay, I just want to quickly scan all of them to see with you what's going on. Euro dollar, we still have a while to go, right? We're still at 134.75. Nothing happened as yet. The pound dollar, this is the 30-minute chart. We are waiting for a break of the green line, for example. But probably in the meantime, we also have to realize that, this could be already a downtrend channel, in fact. I wouldn't have called it yesterday a downtrend channel because to me it was still optimally set for a break here. But we got a pretty, downside again. So in fact, a counter trend trade in here is starting to make more and more sense, right? So we can keep an eye on both lines, in fact. Although I like the upside still a bit more because for me the bigger support is in here. As long as we don't break that, I still consider anything an uptrend. Dollar Swiss is really doing nothing. It's just stuck in this flag sideways move. Usually that is a continuation pattern and we do have an impulse, so that would mean more dollar weakness, maybe down to the 90 level. So the dollar Swissy too, in fact, can be on the watch list for downside. Quickly, Euro CAD maybe. Euro CAD seems to be breaking right now, indicating some CAD weakness. So let's take a look at the dollar CAD. I prefer to trade the dollar CAD. That's breaking this trend line, but it's very passively. It's just going sideways, in fact. I'll probably be still a bit careful with the CAD. Maybe we can take a look at, let's be careful with the CAD for the moment. The odd dollar is breaking the bottom of this triangle. That too, just like your odd happened about 45 minutes ago, I guess. Personally, I'll be rather more interested probably in the euro odd because euro odd, I like the structure a bit more, and it has everything to do with the fact that, let me take a look at the euro odd. To me, it's more of a clear structure, like that's just what is most clear, and a 786 maybe pretty close by. Will it act as support? Well, we never know, right? Not every fib will necessarily act as the golden support or resistance, but we do see that the 382, the 50, the 618, all of them did give a bounce at least, and the 618 in fact gave a bigger retracement, right? So yeah, there is that chance. The 786 is at 93.35. That's only 15 pips. So it doesn't make sense, of course, to trade it right in here to catch 15 pips, risking 30 in a counter trend move approaching 786 fib. That just doesn't make sense. If it would hook back to the broken bottom of that wedge that I have on with the black, indicated by the black trend lines, right, in the middle of the chart, then maybe some continuation makes sense, but not if the currency, and this is important, if the currency moves to the 786 and then bounces, then I wouldn't trade this bottom anymore because the 786 could be the bouncing spot for more upside. Then that support becoming resistance is less important to me at that point in time. I think that level here at around 93 is very important, right? Because 93 was a major resistance, right? So if it hooks back to that level, the 93, 93.30 level, that's just a key level in the market where we could see a bounce. And maybe it would even be worth taking a level, just a level position right at 93.35. In fact, if anything, I would rather take a buy at 93.35 than shorting it to that. So that's something I'll keep, could be on the watch list as well. In fact, a level trade off of the 786 to the upside, 93.35. So just a quick pause here. For those of you who are interested in that indicator, by the way, I got some email addresses from you, but in fact the best is to send me an email address so that we don't stop this webinar too much. Just send me an email and I'll get that to you. That's the best, okay? Yeah, so that's actually answers your question, right, Darshan? Yeah, that would be the likely support. So once again, everyone, don't send your email, don't paste your email there, but send me an actual email. Okay? Send me the email. Any email, just say hi, thanks, looking, please send indicator, that's all. Okay, good. Yeah, I know you did, Darshan, but there are people who who are pasting their email addresses, so I guess they got confused. That's why I said actual. Alrighty. Kiwi is really retracing deep. Not even the 886 seems to be holding. I was thinking about looking at this trend line and see if that trend line, that very steep trend line, breaks for the upside. But even that's not happening. So I'm not sure what's happening with the Kiwi. I think it's in depression, and it's not feeling all too well at the moment, and it has fever and is in bed because no idea why the Kiwi is dropping that fast. Although we did come close to the 786 fib, but well, that could be it. Who knows? We did, we traveled really a lot in one go. I'm not interested in trading this to the downside though. Pound yen. Oh, there it is. Well, let's see. Let's see if we get a lower high here. If we do, that could be the probably first indication that we might break. Still interested in that. Alrighty. You can see though that the moving averages are prices under those moving averages now. So if we break above, we'll be breaking those moving averages as well. Let's go to the 4-hour chart. Yeah, the only thing is that level now I think is key. Very important level, 157.35. If we stay above that, we're still in an uptrend. If we break below, we're definitely not in an uptrend anymore. Over and out. That's the level for the pound yen in my case. And it has everything to do with the fact that that is the fractal below the band, this band here. So that is the key. If that breaks, then we're not in an uptrend according to my definition. Always the band, the fractal close to the bottom of the band in an uptrend or just below the band is the key one. We didn't get any fractal here, so that's why this one is key. If we bounce off that, still an uptrend. If we break that one, then probably, well, then we're not in an uptrend for sure, and we'll probably be retracing a bit deeper. The long-term moving average could be one of those targets. And then, of course, we still have the uptrend channel, though, to deal with. That still, of course, could provide support. Let's see. We are bouncing here at that, maybe making that lower low as we speak. Couldn't break this bottom. And you probably put a fib on this up move. Yeah, right to the 886 fib, in fact. Let's see if that's the bouncing spot. Here in the 5-minute world, there could be maybe a smaller trade up to that trend line here when we break above this. But it's a very tight space compared to the risk. And it's probably at best 1-to-1. Not that interesting for me personally. But it could make that move. Not interested in sells because we're close to a super, super important support. So we didn't want to do that. Odd yen. Well, that broke our fib, in fact. And yeah, this is probably already a downtrend channel. Let's take a look at the 4-hour chart. Yeah, we broke the major level here. This is not a bull flag anymore. That is for sure. The odd yen is not a bull flag. We can do something like this, in fact. And yeah, there's a potential that any hook back here could be a good short to, for example, this long-term moving average at 91.50. So that's from 92.70 to 91.50-ish. It's potential. Euro yen, right at same as the pound yen. In fact, we're making potentially a lower high. The question is that indeed the lower high? Same spot though. Euro odd. Let's see if it's making that pullback. Well, eventually it's going to make a pullback, but well, the 5-minute chart, the oscillator is pretty high here on the 5-minute chart. So what we want to see is the oscillator back to the 0 line, and then a bounce off the band. That could be a good continuation trade. Break, pullback, continuation. Let's keep an eye on that. Euro New Zealand, my idea actually was a reversal trade on the Euro New Zealand. In fact, okay? So, and the reason for that is, although I think that there's more upside left, there is a potential of a hook back and then up to 382 and then maybe 50 fib. But we could keep pushing maybe up to the long-term moving average. I would say that's probably the maximum we can push before we get a retracement, around 164.50. Let me make that red, in fact. 164.50 on the Euro New Zealand, because then we've already traveled a lot, and we should expect a retracement back to the band where we should expect support up to the 50 fib or 382. So something like that is very likely. All right, let's take a look at that on the lower time frame. For example, 1 hour. And 164.50 would be the target there, right? But you see that it's pretty difficult to take it here with that as a target. If we do move back here and bounce, that could make sense. Something like that. But obviously the price is above the band right now. 15-minute World 2. And in fact, that was the whole reason. My trade idea was the upside is, it could push through, but our risk is quite high. However, if we were to make a retracement back to that support level, back to the 1 hour band, because we do have divergence on the 15-minute chart, so that's why I was thinking about this reversal trade. If we break below the 15-minute band, we could make a drop down to the 1 hour band at this support and bounce. So that was my trade idea on the Euro New Zealand, in fact, right down below here. Does that make sense to everyone? Does everyone follow this logic on the Euro New Zealand? Because I've been talking for a while, and maybe everyone is, at the beginning everything is new, but now maybe you're looking at the 10th currency and getting a bit distracted. Does that make sense? The idea here of how to use the bands. Do you see how you can use multiple time frames and see the gaps in between support and resistance on those multiple time frames with moving averages to indicate good reward to risk zones that make sense to trade? And then that's the 15-minute reversal trade idea. But then you can also see the potential of a bounce here up to, from the 1 hour band up to the 4 hour long-term band, right? I know usually we don't talk about moving averages that much. Just showing you a different method of trading it. And that, of course, has everything to do with the fact that I'm giving you that indicator so that you have an idea how you can use it logically. So you probably understood that. That's why I'm diving into that more than usual. So that's why I also want to make sure that you understand that so that you also have an idea how to use that indicator. So it's important for me to get feedback, I think for you too, if you use that. Okay, no problem, Kayla. We can talk about it a bit more in other sessions as well, no problem. What it boils down to is you're using the support and resistance of moving averages on multiple time frames to indicate the targets, to have an idea what kind of risk you're running, and to identify the path of least resistance. So once again, does that make sense? Yes, no. On a scale from 1 to 10, how much would you think you understand of that so far? How far do you think you are? 1 being not so far, 10 being very far. And there's no right or wrong answer there. It's just that, I want to get a feeling who might want to have more explanations in the future. That's all. Okay, maybe a couple of more answers to get a bit more feedback, please. All right, maybe all the others are getting coffee apparently. The question is how comfortable do you feel with using the moving averages, the explanations I just was giving with regard to trading the moving averages and the indicator I will give for free whoever writes me. How comfortable do you feel with that? With the theory and the idea of it. All right, cool. Good. Got some more answers there. All right. Cool. Thanks, everyone. So, yeah, sure. Everyone has to use a bit, use it themselves, of course, to get their own experiences. Absolutely. The pound odd, in fact, Edith, is just breaking out the same way as the euro odd. We can take a look at the euro pound once again to see which of the two we could expect a bit more strength, the euro odd or the pound odd. The euro pound is bouncing actually off the bottom of the triangle. Maybe we could expect a bit more euro upside than the pound upside, but both are breaking, in fact, to the upside as we speak. And the pound odd has been in this wedge for quite a long time, as you can see. Now, it is a triangle, but it doesn't mean there's no resistance, horizontal resistance above, so we should be aware of that as well. Yes, it's primarily odd weakness, absolutely, yeah. So, and there's a lot of risk on weakness, in fact, because you can see the Kiwi is tumbling and the odd as well. And it's not so much dollar strength, in fact, if we can see it now. The pound and the euro, in fact, if you look at it, they're really just going sideways a lot. The euro is maybe pushing up just a bit now. Pound is moving down just a bit. Not doing much, but it's especially indeed the odd and New Zealand weakness that is hitting us in the markets today, this morning. And the yen not doing much as yet. So the odd yen is primarily being moved by the Aussie as well, probably the New Zealand yen as well. And the euro yen and pound yen are hanging at a decision moment. Will they bounce here or not? So maybe the best is, because let's see, the list I had for myself was Euro New Zealand upside. Well, that doesn't look good. Euro dollar upside is not breaking yet. New Zealand dollar upside, that's no Euro New Zealand downside. That doesn't look good, sorry. New Zealand dollar upside, that doesn't look good. Those are not materializing. Euro odd upside, we can wait for the pullback. Pound odd is similar though. We didn't take a look at the pound New Zealand actually, the last one left. Here's an example actually of where you can use the band. You can see when price went through the fractal underneath the band, we got that move down to the long-term moving average. It actually went lower than that, didn't it? Pushed this bit through that. So we're back at the band now. This could still be resistance though. You can see we're at the long-term moving average of the 4-hour chart as well. So just like the Euro New Zealand, I do think that the Pound New Zealand too could have the potential of making maybe a retracement back to support. We could put this trend line on and see how that holds. Someone asked me about the Euro Yen and a trade on the Euro Yen. In fact, I didn't take that trade because I had an entry order waiting for the retest, but it never retested me. Oh, that was Adrian. So yeah, I deleted that one because I was looking for a break. Actually, you can see it. We had that triangle yesterday on, but it was actually also breaking at the same time. Oh, it was breaking, in fact, the band here. You see that? So it was breaking the band, and that move on the 50-minute chart went, in fact, pretty far. It kind of broke above the band, but couldn't break this trend line and used it as resistance. That still got one more rejection down, unfortunately. So yeah, that was the trade idea indeed, was the break of this triangle to the upside, but it never hooked back and just kept going and never made that move back, basically. Just in case you're wondering, in case someone's wondering, yeah, but it moved back here, but that's the whole trade idea was invalidated at that point because we already moved up. Actually, the trade idea was invalidated when we broke this 15-minute fractal right in here because that was the continuation. And it was just a very shallow pullback right there. We paused right in here. That was the pause and then continue. So I wanted to get the pullback somewhere right around here. I had it. So it just missed me by 11 pips there, just to explain that part. All right. So with that said, this is the 5-minute chart on the Euro Yen and Pound Yen, both of them. Let's see if we can break above actually, because if you can look at this, you can see we're stuck in this 5-minute range. It would be interesting if we break above that 5-minute range. Normally not interested, in any particular 5-minute range, but in this case I am, because it's kind of at a talking spot because we are at a bigger 4-hour level and we're hooking back to that 4-hour level. So if we do break above out of this, then it's not really a 5-minute, not only a 5-minute range that we're breaking, but in fact we're bouncing at a support level first of all, and we're actually, it's kind of like a break pullback continuation maybe as well. Right, but the Pound Yen, as you know, it's a bit tight space here. That's why I don't like that. But the Euro Yen, let's take a look. Maybe it's a bit more space. The target would be let's take a look. Anywhere around 133.50 probably. $133.50. It would require a stop loss below 132.70, which would be about 30 or so pips. Could be interesting. So that could be interesting. Maybe one way of doing it is waiting for a 15-minute fractal close above the band. Because sometimes it pushes through the band, but you kind of get still a rejection. Let me show you an example. Maybe here, for example, a bit. Ooh, it's pushing a lot now. Let's keep an eye on the 5-minute world. So probably euro. Let me just quickly check the euro. Euro is pushing. Is the yen moving as well? Oh. Yen is moving up as well, so that's fueling this euro yen, of course. So let's see. Let's monitor this. It's breaking right now. So if we get maybe it's going to move up maybe 10, 15 pips up to maybe 133.10. If we get a pullback down to 132.98, that could make sense. And the take profit would be, yeah, conservative take profit I would say would be around 133.50. We can reanalyze that, but that's what we did just a minute ago. Right at the top of this trend line. So it's a bounce trade back to the potential breaking spot. We probably won't break that line, that pink line, the purple line. Probably move up to it, respect it. Whoa. Move up to it, respect it, and then maybe break or not. Depends. But that would be a great break, by the way. But we do have now in our session maybe the trade up to the trend line. As I said, a bounce trade here. So it looks like the break is acting pretty good. Let's go back to the 5-minute world and keep an eye on the pullback. We're also breaking this trend line, by the way, second trend line here. So let's see, the break, pullback. Pullback would be nice. So anyone interested in this euro yen as well? And we can keep an eye on the euro odd as well for the pullback. That has to go back to the zero line though, the oscillator. I'm just browsing through some comments that I missed. And yeah, Darshan, definitely euro odd. I think it's a very, very interesting currency pair because it really likes to move a lot and trend a lot. It's quite a fast mover, in fact. Oh, Kat has a question, I see. The thick red and green lines are manual drawn lines. I think if you're talking about these thick green, no, those are manual drawn lines. So Adrian is interested in the euro yen. Anyone else interested in the euro yen or euro odd by any chance? Yeah, we got some interest there. Good. The entry, well, what I would be looking for is actually more of a time entry, in fact. What I'd be looking for is the oscillator to go back to the zero line. That would be my preferred moment to know that the trade is ready. What I would like to see is this go back to the zero line, in fact, and we'll probably move back to the band. And what we would see is probably a pop up, pop down, with fractals on both ends. And then the next break of that fractal with a stop loss here would be one way of trading it on the 5-minute world. And then the target, you could put a fib on this move up. And the conservative target would be minus 272. Which is maybe not so much. So maybe the minus 618 would be a bit better. and trail stop it not totally trail stop it, but when it hits the minus 272, that probably reduce the risk to 0 would be the best. Yeah, the minus 618 is a good target because that's only in fact that's a very conservative target. It could probably move up to this minus 272, but the problem is that it might take longer to do that. So it could first stop at this minus 618 or this minus 1000, make another bull flag, and then move up. So it depends if you want to live through that type of retracement to get to that bigger target up at 145. So, you know, if that's the thing, if we could see a bit of retracement here, then up to 144.50, bit of retracement, then up to 145. Something like that could happen. So if you want to trade the 5-minute world setup, what we're looking at, then this would be the quickest in a way to 144.50. If you look at the 5-minute chart, and if you look at this euro odd, we've had 1, 2, 3, let's see, every 5-minute candle has cut the high, right? Since here to here. There have been 1, 2, 3, 4, 5, 6 candles that couldn't give that continuation. So most likely it's not going to continue up. If it does push up a bit, I don't expect much. It'll probably just push up maybe 5, max 10 pips probably above it, I would say. Then make that retracement we're looking for anyhow. So I really want this AO to go back to the 0 line because it looks like that impulsive part is over. And in fact, if we were trigger happy, if you know we weren't in the trading room at the time, but if we would have taken this breakout trade, I would probably take the profit right in here, in fact, or maybe aim for just a few pips higher. But that's about it. This piece. All right, so, and once again, even if it pushes just a bit up, I wouldn't want to trade it because statistically, the chances of it continuing a lot more are just very small. I mean, the only reason for us to trade it above here would maybe be a 1-minute chart for 2 pips. Even that is risky, I think. I don't think there's really much space there, to be honest. Euro yen. Oof. Wow. Got a bit of a wick there, didn't it? On the 5-minute chart. Yikes. Not getting that follow through. Not getting the follow through as yet. So it's good we were not happy, trigger happy traders there, and we waited for the pullback continuation. I don't mind being trigger happy as long as the structure is set up as I want it to be, and that is with the trend, with the impulse breakout. Then I don't mind being trigger happy because then the likelihood of follow through is higher. But if we're trading a bounce and basically we're trading a breakout to the breakout level, right? Because we have actually a breakout level higher. Let me show you. As you know, we have here on the 1-hour chart, we're trading a breakout to the actual breakout because the pink line, the purple line, that is the best breakout trend line because it's a 1-hour trend line and it has a good angle. So we're trading a breakout to the breakout, after a bounce. So that's not an ideal moment to be trigger happy, I think. But if we break this purple line, then I don't mind being trigger happy. So that doesn't seem like it's happening right now. Let's move on to something else. In that case, we still could get a bounce in here because don't forget that we moved up here about halfway. We could get a bounce, who knows, but I wouldn't want to trade it there because it's just so flat. Ugh. It's not worth the risk, I think. All right. Let's, if you don't mind, let's move on then in that case to see if we do find something else. Euro odd, we already talked about intensively. How about that Euro New Zealand? Is it making that reversal? No, still inching forward. You know, it's just going sideways for 3 hours, pushing a bit forward. Not doing much. Looking for that reversal trade if it breaks the orange trend line. Not happening as yet. That's weird. 1 second, folks. I lost my euro dollar chart. Huh. Well, I don't know what happened with it. My chart with all the lines just vanished. No idea where it went to. But yeah, we can take a look at New Zealand. We'll do that indeed. We'll do a quick recap of everything now. Euro dollar is pushing up. It's approaching the 135. So let's, if it hits 135 in this trend line, then what I want to see is a pause, so we get a fractal here. The next break is definitely a good trade to take. Up, 15-minute fractal break, maybe even 5 minutes. Let's take a look. No. You see the move up here is about 35, 40 pips. It's a grayish area. I would rather have a 15-minute pause here at the trend line. Make a small bull flag, then continue. That would be a great break. You can take the entry here, put a stop loss below, and target 2 to 1. Yeah, those two in the middle, thanks. Yeah, I know. But those are fortunately different charts. Those are not the ones I really use for where I have all my lines. I don't know where it went to. I'll find it after. I'll try to look for it afterwards. It's weird. Maybe here. Here it is. It's actually on my to-do list to clean up this and have it a bit more structured. We'll do so by next week. Let's take a look. That's the euro pound is moving to the upside as well. Couldn't break the bottom of that triangle, approaching the trend line here too. Maybe it already broke. In fact, I didn't think about it. If we maybe adjust the channel. Ooh, there are a lot of lines here. Let me get rid of some of them. Okay, down to the 30 minutes. I don't know. I think it's still a good trend line like that. So let's see if at the 5-minute world, we would preferably want to see a respect for that trend line. I hope like a small bull flag and then continuation, just like the euro. Let's take a look at the Kiwi now. The Kiwi, where could it be headed to? That's a good question. I think that looking at this 4-hour chart to get an idea, what kind of momentum we could still expect. We're still very close to this bottom and top, so I would be careful of that. Around 82. If we break 82, we'll probably bounce somewhere in here though eventually. I mean, this is just one straight move through the band. We have to, the likelihood that we pop up is, in my opinion, statistically getting higher and higher. And a pop-up up to the band as resistance and then move down back to the long-term band would make sense. So something like this. Up, down, bounce. That would be probably the path of least resistance, I would think, on the New Zealand dollar at the moment. The long-term band is at 81. Wow, we still got some continuation here on the euro odd. Funny enough, it's looking a bit more powerful than I imagined, but let's see. If we look at the 1 hour world, 1 minute world, we got divergence now between those tops. That's why I did realize that there was that probability of still moving up because of that, but it doesn't always happen. That's why I said about halfway is where I would have taken profit, just in case. But it did push up for divergence on the 1 minute world. It's reacting. We're getting some reaction to that. We broke the top by 6 minutes. Anyhow, it's not that important. Euro New Zealand still not giving that reversal trade. So I guess that's about it. Euro odd upside, Euro New Zealand reversal trades, and the Euro pound breakout, in fact, and the Euro yen breakout and pound yen breakout. Those are probably ones. Yeah, those 6 to sum it up. We can keep an eye on the pound maybe because that's the one that's right at the trend line as we speak. So let's keep an eye on that one. By the way, I have 2 moving averages on here. Does anyone here use shift in their moving averages? Ah, cool, Meredith. What may I ask which one you use? So the question is, does anyone use shift for moving averages? I'll explain what it is, of course, in a second. Okay, most don't know it or don't use it. Not sure, one of the two. It's pretty interesting. Meredith uses the same one as I do. In fact, I have 2 on them. There's 3 MA with a 1 shift and 3 MA with a 3 shift. And they are used by a lot of traders. And what it all boils down to, first of all, you can go to insert, of course, go to moving averages. And then go to period is 3. And then shift is 1. And what it does is it shifts the moving average by that many bars forward. So if you do shift 1, the moving average is not at the current bar, but is 1 bar, is set 1 bar in the future. If you use shift 3, the moving average is 3 candles ahead of price. That's why on the chart here, you see the orange one is ahead of price. It's a future moving average in a way by 3 candles. And 1 is 1 candle. And then what is recommended is the typical price, for example, which is the high, low, and close divided by 3. Not the close. So exponential typical price, period 3, shift 1. And it's a great guide for support and resistance as well. And looking at that shift, you can see that there's a lot of momentum in this move so far. But that, that's pretty logical. And the 50-minute world is indicating that as well. And I think finally, the breakout is about to happen. But as I said, I'm not trading a breakout right here. I want a fractal, so I have a pause there. It could push up a bit higher. That's okay. If it pushes up too much, then well, tough luck. But not going to trade it right here. Need a kind of a 5-minute fractal for the break. You could use higher shifts, I'm sure, or you can test them at least. There's nothing wrong with testing that. I think if you use too many shifts, of course, then the value wouldn't have. I mean, the value would decrease, of course, if you start using too higher. I would think, at least. Who knows, though? If you have some interesting results, let me know with that. And it works well with support and resistance. I actually know a trader who tests it a lot. I don't use it that actively. And anywhere where the currency gets within 30 pips of this 3MA one shift he uses. I think he was using 4-hour, 1-hour chart for that, because 30 pips is quite a lot. He would have an alarm go off, and he would just use it as a support and resistance, then zoom into smaller time frames, and just use that. He liked it a lot. I'm not that, as you know, I don't use it that often because it's the first time I'm telling you about it. It's an interesting way of looking at short-term moving average, because the pink band, or the 3-wave band here, is a good intermediate moving average. The long-term, of course, obviously long-term, and then this could be a very good one for short-term momentum. Now, unfortunately, I think that the euro and pound breaks will not happen, or will be not set up, within our session. The 5-minute world is getting rejection here from the pound, as you can see. And wouldn't you know it, the pound broke the top by 7 pips and moved down from there. As some of you know, the pound likes to break those tops. So, but this is something the euro, so once, I'll just recap because unfortunately we don't have the time to keep an eye on these, or I don't have the time anymore to keep an eye on that with you. I have to send some urgent emails, but the pound and the euro, I will keep an eye on myself, of course, the pound and the euro and versus the dollar, but also against the yen. Very interested in those to see how it goes. We're getting some lift here on the euro, but also the euro odd. Ooh, wow. Well, what can you do? Those are one of those cases where we definitely get more push. Oh, this is the 1-minute chart. Sorry. Even the 5-minute world. Wow. Yikes. That's, what can you do? I didn't expect, statistically, it doesn't, the chances of such a big push are not as high as when this goes back to the zero line. But that does not mean that it's still not a good trade idea, by the way. If it does get back to the zero line, the same analysis is still valid. The trade setup is still valid, by the way. All right. That has not been canceled or removed just because of this continuation. In fact, if it does the same here, back to the zero line, it's still a good setup. And potentially Euro New Zealand there's a reversal. Okay, so that's the things at the moment I'll be looking for. Oh, and the odd dollar, right? The odd dollar bounce off the 786. I almost forgot about that. Getting close. Well, I'm not much of a level picker, so I'm more of a breakout trader. So usually fibs work very well, though. So I mean, there's a chance that we'll bounce here. But I'll probably wait for 1 hour. Maybe 1 hour is the best. 1 hour. Let me write it down. 1 hour pin bar or something like that. All right, before we close, I just wanted to ask you one question. Let me see. We had a question prepared for you, or I had one. There it is. If you could answer the question, that'd be cool, and then we'll wrap it up. I wish you then good trading, and hopefully good breaks and bounces. Thank you for being here, and thank you for answering this question. So the question is, which entry methodology do you prefer? And there's no good or right answer, first of all. Sorry, there's no good or bad or right or wrong answer. Sorry, I said good or right. It's just for my curiosity. Because the structure of the market is just that, and it depends what we focus on. Oh, level entries are like, for example, the 786. Having an entry at the 93.35 is a level entry. Is a entry level at the fib. We basically would be trading the fact that we're getting a bounce at the 786, but we have no confirmation or no breakout that's going to happen. So if we go long at the 786, then it's pre-planned mathematical point indeed. It's a pretty interesting results. I'll share them with you so far. I don't want to influence the results. There's still some people left, maybe, that want to vote. Otherwise, I'll share the results if you're interested with that. Okay, I don't think anyone is voting. 40% voted on level entries. 40% voted on all three. There was 80%, 40 on level entries. That's quite a lot, in fact. 40%. 40% on all three. 20%, 25% on momentum. Just got extra vote there for momentum entries. 13 on confirmation and 13 combination of two. Interesting. I would have expected confirmation entries higher because I would have expected traders to like candlestick formations more, which I consider confirmation entry. Okay. Maybe I should have clarified that. But anyhow, what is done is done. Thanks for that. And thanks, Darshan. Did you see the picture on, I'm not sure actually, LinkedIn maybe? No. Facebook? Not sure. But thanks. We're getting actually married next year in April. Okay. Gotcha. Thank you for those congratulations. Yeah, so maybe, thank you so much. And yeah, maybe indeed, I personally, as you know, I'm more of a momentum nowadays, but I used to be quite focused on levels as well. But they're all three interesting. Thanks so much for the feedback. And yeah, tomorrow we'll have a lesson on Fibos, indeed, at 6 p.m. Central European Time on Thursday, as always. Alrighty, I'll send you that indicator and talk to you tomorrow. Cheers.